Good evening, everyone. Time for another silver update. As you can see, we're at 42.23. Looking at a long-term chart here because I'm going to address a topic about the overvaluation of silver, and there's a lot of shills coming out of the woodwork, so I'm going to look at one in particular. But the reason I'm showing you this chart is because silver has up to this point followed a pattern of spike tops and then consolidations and then spikes and then consolidations. This latest move has broken out. You can see the trend line on the tops. We've clearly broken through that and we're rising with no end in sight. You can also see it on the MACD. We had a nice little top that we touched right here, and we went down and then we blasted up through it. So this move that we're looking at and this move that we're looking at is unprecedented. Will it correct? Yes, at some point it will correct. But that point may be 50. My projection is 50 is when it will correct significantly. Perhaps 10, 20, 30, even 40, 50, or 60% from that point. I doubt the higher numbers. I think probably just 10 or 20 maybe. But then again, it could just blast through 50 and go to 70 or 80 or all the way to 100 and then correct back 30 or 40%. So it's very strong. Anybody that's shorting this market right now is getting their head handed to them. And we want to jump real quick to our trader who has shorted the SLV, and let's take a look at our option. We've got the July 25 put. Now after market we rose quite a bit, so we're down to 13 bid, 15 ask. You can see that we're up to 111,000 contracts, so I think the high we hit on this was, it might not have it here. Well, the days range 14 through 16, but I think it was 18 or 19, and then it took off from 8. So I expect tomorrow when we look at this, considering we're going into all-time highs, this should actually be below 10 cents tomorrow. But we'll have to wait and see. So this big brouhaha over this one trader or whatever it was seems to be a flash in the pan, just a whole lot of nothing. Wanted to talk about an article that came out today, and this is I'll call this guy a super shill. This is by James Debevic, and it's on Minionville, which, well, I'm not going to make a comment about that site, but Mr. Debevic is telling us that silver is the most overbought since at least 1712. So, conclusion one would draw from that is that anyone who buys silver at this price is just simply insane. So, let's look at Mr. Debevic's facts and see if we can make any sense of what he's saying. He says, in today's silver mania, well, that's pretty much where he's coming from. In today's silver mania, it seems you can't get through a week without coming across yet another article on the gold-silver ratio. Well, today is your lucky day because here comes another one. However, this article will go far off the beaten path and explore a new way of looking at the gold-silver ratio, which has never been revealed before. Oh, Mr. Debevic is going to share his wonderful wisdom and explain to us something that no one's ever seen before. I'm waiting with bated breath. Many people have tried to analyze the gold-silver ratio. The gold-silver ratio in its purest form does not appear to have much to offer with respect to forecasting value. That is because the ratio exhibits secular trend creep bias. In this study, annual ratios are used, as is rather difficult to obtain daily gold-silver ratios in the 1700s. Okay, not sure why Mr. Debevic is going back to the 1700s. Looks like he's got to do a long reach to make his case. From 1712 to 1875, the ratio each year had a 14, 15, or 16 handle on it. perhaps Mr. Debevic, that's because gold and silver were money, and they were authorized by the Constitution, and they were both in circulation as money, and silver had not been demonetized yet. Did you ever think of that? Probably not. Many silver bugs say the historical long-term ratio between gold and silver is around 16, and they are waiting for it to hit that number. In 1876, the ratio skyrocketed to 17.75. From 1876 to today, gold has gone up 6,135%, while silver's gone up 3,002%. The reason for this is the historical ratio between silver and gold was often imposed by the government rather than the free market. Leaving a little bit out there, aren't you, Mr. Debevic? Such as the demonetization of silver by the governments of the world. That's little important fact if you're going to talk about this sort of thing. Once it was allowed to break free, the ratio has gone all over the place. Ranking the ratios does not offer predictive value, as the lowest reading over the last century is still above the highest reading of the aforementioned early years. So the first instinct is to deposit this indicator in the garbage can. No, my first instinct is to deposit your research into the garbage can. However, it has been observed by many that silver seems to exhibit more speculative characteristics than its more reserved older brother gold. In comparing the gold-silver ratio's average price, as calculated by measuringworth.com, throughout the year to the gold-silver ratio's yearly closing prices provided by Charts R Us, a very interesting pattern was accidentally discovered. The ratio between gold-silver average price for the year and gold-silver last price for the year reached an all-time high on December 31st, 2010. Well, I guess that might be the reason why maybe Mr. Debevic shorted it. We'll see that later. That's a speculation on my part. What this basically means is that silver has been outperforming gold for more than any time in the last 299 years. Extremes in long-term indicators which span 4 centuries should always warrant attention. The next step is to see what happened next, the other times when the indicator reached extraordinary levels. The year shown is the signal year. The number in parentheses after the year is the indicator level. This allows the reader to compare how extreme each reading was. Looks like they've got to reset to play their ads again. In looking at other highs in this ratio of the ratios, a certain pattern begins to emerge. Let's take a look at the top readings for this indicator since 1712 and see how silver fared in the years after this signal was given. 2010, 50%. Now remember, he said this was the reading of the indicator. So this is the top one, 2010. At silver's January 28, 2011 low, silver was down 14.9% for the year. It rebounded strongly and went up 36% for the year thus far. Silver's secular bull market started 20 years ago. Okay, here's the first. What's this guy talking about? 20 years ago was 1991. Silver hadn't even bottomed. And I'm going to show you where this guy contradicts himself down below here. So I honestly, I don't know what this guy's babbling about, but it's complete nonsense. Silver's been in a bull market really only since about 2002, 2003, when it broke through the $4 and $5 range and has continued up. But it's convenient for him because he can cook his statistics based upon some phony period like 20.1 years. In this secular bull market, silver has annualized 13% a year, which beats the CPI by 10.46% a year. Even if one is skeptical of CPI numbers, silver vastly outperformed inflation by any alternative measure of inflation one chooses. Okay, so the silver bulls were right. Were you a silver bull, Mr. James Debevic? Did you advise people to buy silver when it was low and undervalued? Yeah, not too likely. So, and he goes on. I'm really not going to go into these because I'll give you the link. It's really just a bunch of nonsense. I mean, it's so convoluted and so bizarre the stuff this guy does. It doesn't really even make any sense. I've read over it at least 4 times now. I can't figure out for the life of me what this guy's talking about. He's just like a babbling idiot. But anyway, let's look at Mr. Debevic here. And James Debevic is portfolio manager of Absolute Value Fund, LLLP, and founder and principal of Absolute Value Capital Management. Oh, he's a hedge fund manager. Mr. Debevic has obtained both a Bachelor of Business Administration degree with a major in finance and a master. Oh, he's an MBA and a finance major and a double specialization in international business from the University of Miami. He's a chartered financial charter holder, a chartered market technician. He's just wonderful. He knows everything. Okay, so took me a lot of digging, but I did find, after a long amount of digging, that Mr. Debevic here, a chartered financial analyst, he actually does run his own hedge fund. So let's take a look at Mr. Debevic's hedge fund. It's called the Absolute Value Fund, LLLP. It's hard to find. You're going to have to dig around, but I managed to find his performance numbers. So let's take a look at his hedge fund. First, I want to point out that Mr. Debevic charges a 1% annual fee, management fee. He also charges a 20% performance fee. So I guess if he makes money, he takes 20% of your money? I'm not sure. Anyway, so when we get down to his performance, we're going to have to subtract his fees out. So you can see he started in November of 2001, and he promptly lost more than 10% of his fund's value. Then he had a big year in 2002. Made a ton of money, ended the year at 185%, but promptly dropped a lot of money the next year, then made some more the next year, but kind of went sideways until the financial crash, and then he lost half of the value of his fund. Made 10% back, but then last year he lost 8%, and so far this year he's down 17.63%. That's kind of interesting. Why don't we look at our Netdania site and see what silver has done so far this year? If we go to Netdania and take a look, we can see that, well, we need to go to quote list. And this is just the currencies, and just mainly currencies, and then gold and silver and some crude oil at the bottom. Let's scroll over here and look at our year-to-date change. Oh, look at that. Silver's up 36.88% for the year. Gold's only up 3.96%. And oil's up 18%. So while silver is up 37% for the year, Mr. Debevic's fund is down 17% for the year. Kind of makes you wonder whether Mr. Debevic might be short some silver. Kind of talking his book. So, as of March 31st, 2011, the Absolute Value Fund's annualized return since its November 1st, 2001 inception is 3.98%. Isn't that about what T-bills pay you? Oh, that's right. We have to subtract his management fee. So that puts him down to 2.98%. And then we have to subtract his performance fee. So all the years he gained, he took 20% of the gain. So we take that out. Mr. Debevic is returning maybe 2%. So, yeah. Real winner. So this is the guy that's telling you that silver is in a 299-year bubble. And he's been wrong for 10 years running about silver. We don't find any recommendations. If we take a look here, and let's look at his recommendations, we'll jump back and see it'd be kind of interesting to look at other things that Mr. Debevic has written. So let's take a look and see what some of his other articles are. Let's see what James Debevic has written. Well, let's see. He tells us silver is the most overbought since 1712. And indicators suggest no new silver yearly closing highs until 2034. And gold's average price is second most overvalued since 1791. Why it's extremely risky to hold gold now. Commodities now resembling tops. Oil spikes have always led to stock and commodity bear markets. And the worst possible asset class to own. I wonder what that is. Oh, it's commodities. Yeah. What a clown. So, again, the shills are coming out of the woodwork as silver is going through the roof, and they've been wrong. They've been wrong running for I don't know how long. It's hard to even track because they're just so wrong for so long. Silver's up 36.91% this year alone. Mr. Debevic is down almost 18%. And that just pretty much speaks for itself. Talk to you next time.